Exactly.
Thing number two, Gary, we're talking June PPI came in high. July PPI lighter than expected. Conclusion, rate cuts coming sooner rather than later once again.
Yeah.
Thing number two, Gary, July PPI is below expectations.
All right. So the PPI stands for Producer Price Index. And the reason that matters, the reason it's important as a measure of inflation is the producers see these price increases first. If you're a manufacturer and you're a provider of services and your costs go up, you see that in the PPI first, the Producer Price Index, and then later, few months later, we see that in the CPI, the Consumer Price Index, which is what we all experience as inflation, or the PCE, which is the Personal Consumption Expenditures Index, which measures how much more people are spending. So, this is the precursor. And last month, we got a surprise. The PPI came in light. It was only up 0.1% for the month. The core PPI was flat versus the prior month. Expectations were for 0.2% for both. The annual PPI was a 2.2% number, that's respectable. Ideal would be zero, but 2.2% is well within reason. The core number was a bit higher, which came in at, hang on here, 2.4%, which was well below last month's 3%. So we're really seeing a lot of disinflation here. Again, the numbers are too high, but definitely getting better.
Overall, Gary, positive report for those looking to see lower inflation, lower Fed funds rate. One area of concern, though, that you mentioned was the increase in pricing for final demand goods. Tell us more about that. What is it? What does it mean?
The reason that matters is over the last couple. So actually, you know what, Rob? Let's go back a couple of years to the COVID related lockdowns. So everybody's,
Oh, please no, Gary.
sorry, everyone. Right? Trigger warning. Don't we need
Yeah,
a trigger warning?
Yeah, can we get a flash?
Right,
Red
Andrew,
warning?
flash up a trigger warning for everybody. All right. So what happened was everybody's, sheltering at home, in their 2 weeks to stop the spread or slow the curve or, whatever
The
language
first
they're.
2 weeks were very fun. I will say that. I had a
Of
great
course.
time for those
Yeah,
first couple of
of
weeks.
course. Okay. So when that happens, demand for services plummets. Nobody's going, out to eat or, to concerts or anything like that. Nobody's getting on planes and staying in a hotel. But people built out home offices, they built out theaters, they built out home gyms, right? They're like, okay, if we're going to be locked in for a while, we might as well make our home nice. And, they had the money to spend. So what that did was that spiked the price of goods. Then the economy opens up and everybody starts going out. And we saw massive services inflation, followed by, there was all this pent up goods spending. And now there was less demand for goods. And so over the last couple of years, we've seen very little inflation in goods. And the price of some goods has actually gone down. Um, and we've seen high services prices. And this PPI report actually reversed that. We saw a monthly increase in pricing for final demand goods of 0.6%. That is enormous. That annualizes to more than 7%. And that's pretty unusual. And that was a huge reversal. It's also one that we warned about in last week's 5 things. We talked about, higher prices for automobiles and said, hey, if we start to see higher goods prices, the Fed is really going to have a problem because services inflation has remained very sticky in that 5 to 6% range. The interesting thing here is most of that huge increase in goods pricing was offset by a decrease in pricing for previously sticky final demand services. So we saw a bit of a reversal here. I don't know that that's going to continue, but it's potentially concerning for the Fed because they've had a hard time getting services pricing down. If we get higher goods pricing, they're going to be cutting it right into, huge amounts of inflation. And so, the only other thing that I would add, and this is relevant for both the PPI and CPI. Again, the conclusion here is I think we're going to see a rate cut in September. I think 25 basis points, not 50. But one thing that we're expecting to see is DKI has been talking for the last couple of years about how unreliable the employment numbers have been. And so, people say, hey, we've got this really strong economy. We have, great employment numbers. And we've constantly been saying, no, the employment numbers as announced are always great, but then a month or two later, they're always revised down. We're seeing rumors that they're due to revise the jobs number for the past year down by 1 million jobs, wiping out all these gains. So literally every time in the past year, you saw a headline saying the jobs number is good, they beat expectations, we had growth. That is all about to be wiped away in one massive, restructuring. Um, and so, look, that data has been horrible. It's been inaccurate. And, I think what we're looking at here is now we've got a disinflation in the PPI in a huge way, some decent disinflation on the CPI, and we're about to see a massive revision of the jobs numbers. And, I'm going to let the political analysts out there figure out, is this good or bad for the incumbents or the upstarts for the election? On one hand, if you're the Democratic Party and you want to stay in office, you want to say, we've got the rate cuts coming and we'll have a stronger economy. And so this data helps the Democrats who will want a rate cut. But the other side of it is, if 1 million jobs just got wiped out, all of a sudden the economic data isn't going to be looking great. And we could be getting, some sort of potential recession warnings right before the election. That's not great for them. So, it's kind of one of these on one hand, on the other hand arguments. If you have a view on whether this data is good or bad for Team Red or Team Blue, put it in the comments. I'm interested in your opinion. I'm not sure who this is helping right now.
Would love the discourse, and as Gary's always says, if you disagree with him, just tell him why. That's the only stipulation we have.
Yeah, and by the way, it's cool if you're listening to this and you're Team Red, you're Team Blue, that's fine. You're entitled to your point of view. You're entitled to your political opinions. But I'm interested in your view. Do you think this data, helps or hurts, the guys you're rooting for? I'm not on the other side of this. I'm just interested in what you guys think.
Yeah, 1 million jobs is a big number in terms of revision.